Hi everyone, Donna here with Bookkeeping Made Simple. Today we're going to talk about not the SCorp. We've already talked about the SCorp. We're going to talk about the SCorp, that dirty, scheming, lying group of people known as a corporation, taxed under the C, that are the cause of all ills in our capitalist society, and the one business entity that politicians just love to pile on. Yeah, the SCorp. If you enjoyed these videos, as always, please like, share, and subscribe. This is how I grow my channel. Really trying to get you the information that you actually need to grow your business. So if you enjoy it, you like it, you're entertained by it, you just thought I was funny, please share the love. And I love it when that happens. So let's get into it, shall we? What is a corporation? I didn't go into this on my video on SCorps. I don't know why. So we're going to dispel some myths here. There are several entity types available for business owners. We have covered the SCorp, the sole proprietorship, and the partnership. Now we're up to the SCorp. Every single business entity type has drawbacks and advantages, and that's really important to keep in mind. So it is not about what is the right business entity. If there was one right business entity for everyone, there wouldn't be choices. It is about what is the right one for you, where you want to go in your business. So let's talk about it. Let's start with the discussion of corporations in general. What is a corporation? People throw this word around and I don't think they know what it means. Corporations are organizations of people who have met the legal requirements to operate as a single person or entity. People get thrown off by that term legal person. It is an entity. It is treated like a single person for the purposes of the law. That does not mean that it has, it doesn't mean it has any more rights than anybody else, really. Corporations, however, can enter into contracts and they can engage in transactions as their own entity. That's their job. Both SCorps and SCorps, but especially SCorps, are governed by a board of directors, and they are run by what's called the C-suite. Believe it or not, the C-suite has nothing to do with the corporation type. It is to do with the first initial in all of the job titles: Chief Executive Officer, Chief Technology Officer, Chief Information Officer, Chief Financial Officer, Chief Operating Officer. These are, and some others, you can throw some more in there. They are the C-suite and they run the business. They are the managers, basically. The C-suite manages the business. The board of directors gives information on how the business should be run. The president and the CEO are often the same person, but don't have to be. They're just as often different people. So the president is the president of the board of directors, and the chief executive officer makes the decisions for the business. Now, SCorps are the most complex of all business entity types. They are very formal in how the corporation is managed. For example, meetings of the board of directors must take place at least yearly and can take place anywhere in the world. Proper notice must be given, and these minutes must be kept. These meetings are much more formal than for LLCs. Now, I'm going to give you a caveat. The board of directors could be the business owner, the spouse, siblings, in-laws, children, adult children. So you do have an opportunity to kind of take advantage of the fact that you must meet as a board of directors once a year, and that meeting can take place wherever you want it to be. So for tax purposes, that could be kind of nice. However, like I said, formal notice must be given. And that means you can't just call your friends and family and say, oh, we're going to have a meeting of a board of directors. Y'all want to come? You have to have a proper board of directors. They must be on the board and involved in the business. And then you must give them formal notice. The meeting of the board of directors will be held, I don't know, July 14th to the 18th in Las Vegas, whatever it is. And there must be a meeting, and there must be minutes kept at the meeting, and the business needs to keep a copy of all of this. So it's much more formal. There's much more paperwork involved, but you can turn that to your advantage. Corporations are owned by shareholders or stockholders. They are called that because they own shares of stock, which grant them certain rights. And there's different kinds of stock that grants different rights. Common stock usually has voting rights, usually, but not always. Common stock allows the shareholders to vote in matters that affect the business. So if the board of directors opens something up for shareholder vote, shareholders who own common stock have the right to make their voices heard. However, in exchange for their voting rights, they also lose the right to be paid first, to be the shareholders paid first in the event of a bankruptcy, if everything has to be liquidated. Preferred stock get to be paid first. So if the business goes belly up and they decide to liquidate everything and pay off all of their creditors and investors, and they do pay them in that order, creditors first and then investors, the stockholders whose stock is preferred, this is where the preferred part comes into. They are preferred to be paid back first in the event of a bankruptcy. They are also preferred to receive dividends first. So that's kind of the difference. Some corporations have many different stock types, but these are the two that are the most common. In C-Corps, there are no limitation about the type of entity that can hold stock or the number of shareholders you can have. So if you'll remember, in the S-Corp, shareholders must be U.S. persons only, okay? So the U.S. person could be a domestic company, but it must be a U.S. person, and there can be no more than 100 shareholders. However, and if a shareholder sells their stock to a non-U.S. entity, or they get 101 shareholders, the IRS will turn them into an C-Corp whether they want to be or not. C-Corps, on the other hand, can have as many shares, as many stockholders as they have shares of stock. This is the type of business entity that you see on the stock exchanges. So these are the publicly traded companies, are almost all S-Corps, by far preferred. Excuse me. It's very common for S-Corps to have hundreds of thousands of shares available. It's very common for them to be traded on the stock market, which is called the secondary market. It's just, it's very common. Those shares can be bought and sold, traded, inherited, and the corporation itself can be sold or bought. This is not like a partnership or a sole proprietorship, where if there's a change of ownership, the business is dissolved because the partners or the sole proprietors are the business. There are some, like I said, this is the most complex business entity there is. Due to the Sarbanes-Oxley Act, management, see also the C-suite, can be held responsible for bad acting. The reason for this, if you probably aren't surprised, is Enron, along with WorldCom and Arthur Andersen. Arthur Andersen went under, they're an accounting firm, and they went under because they were complicit in what Kenneth Lay was doing at Enron, trying to raise the, or overstate net income to look attractive to investors by hiding some of his liabilities and debts. So there's a whole long story about that. It's not really appropriate for this video, but that's why we have the Sarbanes-Oxley Act. So the C-suite, the members of the C-suite can be held responsible if they are willfully and knowingly committing fraud of some kind in the business, or otherwise bad acting, that especially if it affects the stockholders. That is therefore, by the way, the stockholders and creditors protection. With that said, the shareholders are not responsible for the management or the debts of the firm. The liability extends only to the possible loss of their investment and nothing more. So if you invest $1,000 in stock in a C Corp, you could lose your $1,000 for sure. But you're not going to be, nobody's going to come knocking at your door and say, well, you own 1,000% of this company and they're going under and we want you to pay your share of the debt. That's not going to happen. Remember, a C Corp is an individual, it's a separate entity. Okay? So the shareholders are not responsible for its debts at all. It's different from a sole proprietorship that way. It's different from a general partnership that way, in that in both those cases, the owner is responsible for all debts of the company. Now, for tax purposes, and this is where a lot of people really get scared, C Corps can be subject to what's called double taxation. In other words, the corporation pays its own income tax. So the corporation, they get to write off all of their expenses after their, they have their revenues, and they get to take out their expenses, and then they have offsets for losses and deductions and credits, just like any other person. And then it pays dividends on after-tax income. It may pay dividends on after-tax income. A C Corp does not have to allow that income to flow through to the stockholders. It can choose to keep that money and reinvest it in the business. Now, when a dividend is paid, shareholders pay their personal income tax on their earnings. This kind of scares a lot of small business owners. I advise you not to be afraid of it. There's a lot of ways that we can manage that debt and eliminate or at least mitigate the double taxation so that you're not really paying much more than you would have been paying anyway. Or maybe you pay less. There's a lot of benefits to an S Corp too. The laws pertaining to S Corp is well established. There have been corporations in the United States for 150 plus years. So, we don't have to worry about trying to figure out how to treat one because it's well established. There's a lot of precedent. And it used to be the biggest way to start a business other than the sole proprietorship and the general partnership. So that is it for today. I will be talking about LLCs in my next video. I'm looking forward to sharing that with you. Have a great week.